Hello, it's ChewDog Charts, and it's time to get back to stocks. If you remember, a while ago, I did another video called Stocks at a Discount. So Stocks on Sale is a continuation of that video. And for reference, I suggest you go back and take a look at that video. Again, Stocks at a Discount. You can take a look at that video because there were some great stocks that we analyzed there. And it's another great way for you to do some research on me to see what stocks I'm recommending and how well they do. If you find that those stocks are doing well and you like what you see, then promise me to subscribe and hit the notification bell for new videos. And I'd like you to follow me because the stock market is going to get serious here in 2018 and you need to be ahead of the market. And with me, you'll know what's going to happen. So today, we're going to take a look at three more stocks. And as a continuation of the stocks at a discount, I sent these stocks through a screening process, a basic screening process. There were three screens. The first screen, I wanted to have a negative total return over the past 12 months. Basically, I'm looking for stocks on sale. The second screen was a gross margin screen, and I wanted the gross margin of the most recent 12 months to be improvement over the prior 12 months. And then the last screen, I want an increase in sales over the past 12 months from the 12-month prior period. So again, I want a negative return for stocks on sale, but I want improvement both in the gross margin and in the gross sales. So let's take a look. Now our first stock on sale here is Anadarko Petroleum Corp. Symbol is APC. Anadarko Petroleum has a minimal dividend of 0.36%. The total return over the past 12 months was negative 31%. Again, we want a negative return because we want a stock on sale. However, the gross margins improved from 2.2% to 24.03% for the past 12 months. Significant improvement. As well, there's been a 50% increase in sales. And looking at the price chart, we had a bottom here in 2016 and then apparent successful test of that here in mid-2017 with a move upward, going through the 200 EMA to the 20 EMA. It still has yet to get through the 50, but we'll see soon enough. Moving down here into the MACD, this shows much the same. The bottom here in early 2016 with the improvement, and then another successful test here in mid-2017 with a fast line moving through the slow line here. Moving down into the histogram shows us much the same. Into the momentum indicator, again, successful test of that low we have right here, and it looks like we're going to head up toward the zero line. Into the price rate of change, the fast line is moving above the slow line here, and again, showing good improvement over the past couple of years. Moving through to the relative strength index, we have a moderate 54.42, but once again, the successful test, and then the upward move to the midline, and looks like it's moving up through the midline. The stochastics as well, much the same with the successful test, the fast line moving through the slow line, and this looks like it's going to head up to the 50 or midline. Into the volume is fine. Moving through to the Williams. The Williams looks like it had another bottom here in mid-2017, but a strong move heading up toward the negative 50 or midline. Back to the price chart. This looks like we're moving through the EMAs here, but it has yet to hit the 50. But I don't think that's necessary if one wants to take a look at this and add it to your portfolio. But as usual, please do some further analysis of the fundamentals before you do any buying. I do not hold this stock or any of these stocks at this time. These are just for consideration, but they look good at this point in time. So now let's move to the next stock. And the next stock on sale here is O'Reilly Automotive. The symbol is ORLY. Now, O'Reilly Automotive does not have a dividend, and the past 12-month return was negative 10%. The gross margins improved only slightly from 52.38% to 52.62%, so only marginal improvement. However, the gross sales did improve 12% over the previous 12-month period. Looking here at the stock chart, you can see that the bottom back here in mid 2017 was somewhere around, say, $170. We're now at $260. So that's an improvement of $90. So much of that easy money has been made. Let's go through here into the MACD. We can see the bottom at this point here, the fast line moving, but it hasn't moved through the trigger line. Somewhat surprising given how much money has already been made in this stock from the bottom. The histogram shows a very deep move here with the positive movement in the past, say, several months or so. The momentum indicator reflects much the same. And into the price rate of change, we had the bottom, the fast line moving through the slow line near the zero line. Moving on down into the relative strength, we're at a moderate 61.89% level, moving off the 20 through the midline or 50 and up. Looks like we may continue on here into the stochastics. The stochastics so much the same with the bottom here, fast line moving through the slow line there. The volume is moderate, and then the William again reflecting much the same as the other oscillators with the bottom here and then a strong upward move in the past several months. Back up here to the price chart. Looking at this, my recommendation is just simply follow this. The easy money has been made. There's other stocks out there that you can pursue and have a better risk reward lookout than O'Reilly Automotive. So now let's go ahead and take a look at our last stock. And our last stock to take a look at today is Merck Company. The symbol is MRK. As we see here, the current price is $56.99. Now, Merck has a 3.37% dividend, and over the past 12 months, it had a negative 4% return, with the gross margin improving from 64.91% to 68.58%, a moderate move. And then the sales were the gross sales had an increase of 1%. Again, that's only marginal. But I happen to like Merck. It looks good on the charts here, as we'll see. So moving down into the MACD, we see that there was a prior bottom here in early 2016, and it looks like we may replicate that here come early 2018. Moving into the histogram, we see a little bottom here. We don't have too much improvement yet, so we can watch that. Into the momentum indicator as well, a possible bottoming process here. No significant upward movement yet, so we need to keep our eye on that. Price rate of change. We do have a bottom here and some improvement here. The fast line has yet to move through the slow line, but that's going to happen here pretty soon, I would imagine. Into the relative strength, we have a lowly level of 40.54, but it looks like it's bounced off of this level here and on its way to improvement, maybe toward the 50 or midline. We'll see. The stochastic has not yet bottomed here, so we need to watch that. So we're perhaps a bit early in this stock, but we can watch the formation of the stochastic fast line as it curves, turns, and then hopefully an upward move. We just need to keep monitoring this one here. And the volume looks fine as well. The Williams had a bottom here in late 2017 with the upward move into early 2018. So one good sign of improvement. Back up here into the price chart. It looks like we're wrestling with the 50 EMA. Looks like we're going to stay above the 200 EMA, maybe bounce off of this level here and move up through the 50 and the 20 EMA. Keep our eye on that. But it looks like we have an overall general upward trend. So I like this. I saved Merck for the last because it was my favorite of the three stocks, but something that we do need to conduct additional fundamental analysis on. But once again, if you want to do further research on me or some of the other stocks that I've analyzed, go back and look at stocks at a discount, and then you can see how well I've done since then. So for now, it's ChewDog Charts. Please subscribe, follow me, and perhaps hit that notification bell for any new videos. And if you want, please click that thumbs up. So for today, again, ChewDog Charts, thank you.